Hello, 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 everyone. Happy Friday afternoon. The week is over. Happy Friday. Jake, how is everybody doing? Did you survive the trading week? I hope everyone stuck to their trading plan and didn't do anything stupid. So we're down again today, slightly down again today. I'll give you some thoughts and maybe do a little teaching today, this afternoon, and then we'll roll into the weekend. So, by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer time viewers, please hit that like button and leave some comments, especially that I can't pronounce words. With that, let's see what is going on. We will look at some stuff, still stuff going back and forth with Russia. Now they've banned Twitter, YouTube, Facebook, so things still aren't improving over there. Let's just take a look at what the S&P did. You see here bouncing off this key cluster area yet again. So that's 1, 2, 3 little chipaways. And hey, Dan Jet, glad you could make it. So 3 chipaways. That level is very critical now. Actually, you can see it's actually 4 little major chipaways at that level. So if we do break that level, I'm prepared for much more downside action because there'll be a fair amount of stops below that level at some point. We'll review all the breakout things and everything else on the Sunday show. Just wanted to go through that real quick. Again, rotation zone held. Let's just take a look at the end of week, spike up towards the weekly rotation zone, but then still closing down, and a down close from last week. An up close from the open of the week, but a down close from last week. Jumping over to the Nasdaq, let's just start with the weekly here. You can see running up to the weekly rotation zone and then closing red for the week. So, and another down close from last week. That daily bouncing off this 13,770 area. Again, let's just peek at the shorter term. You can see, and it looks like that's not a double bottom there because it's not reversing enough of a move. However, you can see also this, I might have to fine tune this level a bit, but we've chipped away at 1, 2, 3, 4, 5, 6 times. So below this area, I'd say watch out below. Dow, again, rotating down, still caught in this key area. Let's take a look at that weekly also. Red close on the week and down close from last week. Couldn't even get to that weekly rotation zone. Hello, Options 22. Glad to have you here. By the way, Options 22, I sent you an email. I don't know if you got it. Let's see what else we have here. Let's take the chip away at this, and I'm definitely going to have to bump this level down a bit. I might as well do that right now. About 33,230 area. 1, 2, 3, 4. 4 tests of that. So that's going to be very key going into next week. Let's see. Tesla pretty much nearly flat on the day, down from the open, but flat from yesterday's close, nearly. You can see how nicely that harmonic worked that we did that projection from. Again, these harmonics, 825.54, bouncing off there, and that level just holding with the back and forth chop. We had a lot of back and forth chop with a slight downward bias overall in the market. Sure. Could I review Snap as a short and how you would handle your stops? Bearish close today. We will look at Snap in a second. Tesla, again, is just going to be a breakdown or breakout. Also, earlier, Ken asked, not in this live stream, but another one, was it going to be a buy above here? And I said it would be aggressive buy, but we had to wait for the week to close and see it close down here, so there was no aggressive buy. That's why you always wait for it to close and don't try to front run a pattern. For Tesla next week, key area I am watching at this point is based off the daily stuff, about 880. Above 880, I'll watch for a breakout play. And at this point, let's just bump these levels down. Below about 816, 817, I will watch for a breakdown play. it still favors lower price action, but it still has to now prove itself either to the upside or the downside. Was it still favor lower price action? We triggered that massive double top, already hit the first target, coming up, testing the rotation zone, and still that rotation zone holding. So let's take a look at Snap. Snap. How would I play this? Let me get the bigger picture in here with Snap, clear up some of these little levels here. All right, well, we had the bearish play down. First reaction off the 200, dipping below with the, and then rallying back up, returning to that weekly rotation zone and rotating back down. So based off the daily, this would just be right now with the breakdown from here. I'd be looking for short trades because now it's rotating back over. You have the rotation zone. This is called a double cross pattern. It crosses up and cross down, which pretty much you got the bigger correction back to the weekly rotation zone, which we already looked at. So this, especially on any rally retest, 35 area would be a shortable play, and I'd watch for this gap fill. The great way you can use it for lowering stops. Didn't want that. Well, the low and the close are close enough. I'd be using, see, it's right at the 50% level from here. So now, especially once you get a close below 62.5, it really favors a full gap fill right here, even though I technically have to put it from the closing price. They're close enough, though, that it's not going to make a big difference. The whole stop on this kind of short play would have to be above this 42 area. Other than that, it's just shorting rallies and playing for the gap fill. So that's pretty much where you are, and it closed right at that 50% key level. So yes, you could still get a strong rotation back up in here, but with the first cross the rotation zone and going against the weekly rotation zone, I would just, and coming out of the weekly rotation zone, I would be watching easily for the for a lower fill. So any rallies would be sold from my perspective. And even if it got back above the 37.55, now the stop initially would have to be above here, but then I'd start moving it down pretty aggressively once you got the close below the 62.5. So that's where we're sitting right now with Snap. Wanted to point something else out. PayPal. All right, I've talked about this, why it was so difficult to, you're trying to buy these little pushes up against the rotation zone you see against the daily and the weekly. This is sort of a teaching session. And then yesterday we closed just below that 62.5 level from this key thing, which was further price decline. We got a little further price decline, but this was enough now to make a double bottom play. Technically, I'd use the conservative targets. And why do I like this much better than trying to grab this little bit? And this doesn't mean it's buyable now. However, a 113.54, especially if this rotation zone gets out of the way. This doesn't have to trigger even on Monday, but you get the daily rotation zone out of the way, the probabilities go up. And this is the kind of play I like, because now it's got a much stronger bottoming pattern. And then I don't mind playing these because look at those conservative targets. Now they might change slightly, but that would just take it back to the weekly rotation zone. And then guess what I'd start watching for? A rotation back down. But that's a much safer bounce play than trying to grab a little mini bottom, which I talked about before, because look at how much it's wiped out. Unless you bought really the first hour of the day or the first couple hours, you're back to break even or underwater. I'd rather wait for the highest probability or the higher probability trades. So I just wanted to do a little teaching thing off of there, because that's why I'm not concerned about trying to grab bottoms. I'm concerned about trying to find high quality bottoming patterns. And this could have still head lower. What I'm saying here is I'm not saying I would not front run this either, unless there was like a strong intraday play that I could do that could potentially roll into this pattern. But I wouldn't just go, oh, Monday we're just going to buy this because it might. No, this could easily continue lower. But now it finally got into the realm of where it is a potential double bottom play. So TSM weekly double top today. TSM. Yeah, we looked at this before. Taiwan semi. Yep, that is triggered. So, and this is a long-term play, and look at that. I love this with the weekly. Full target. Would not ignore the second target, though, but this is something that can be played because it's a weekly play. This could take many weeks to fulfill the target. Okay, but this is something that even on rallies, setting up for rollover plays. So let's say it rallied into the rotation zone again. And even it could rally up, fill this gap, and then just roll over again because now this is prior support becoming resistance. So this could be a long-term play for many weeks when you get good bearish setups to play for. So thank you for letting me know about that. I have not reviewed all my charts yet for the weekend, of course, because it's only Friday afternoon, but that is a great longer-term play for Taiwan Semiconductor. Let's just check in with the SMH. And you see the SMH, there's your weekly. The only thing that would really start validating that is that, I don't even know if that is a potential double on the weekly. Let's just check it out. Let's just check it out. See, nope, no potential double. It's two bottoms at this point. So you also have your SMH rolling over after testing that weekly rotation zone. And it's, especially if the SMH starts breaking down below this 250 again, that's going to even weigh more heavily on. That means the whole semiconductor space is rolling down. Let's see. How do you handle doubles that hit the first target before they trigger? Is it a mistrade? It's a mistrade. I will still, depending on what I'm doing with a longer term pattern, I can still buy. It's technically a stop reduction, okay? So you can reduce your stop and still get in it on pullbacks. I will still play pullbacks if it's a very strong pattern and I am very, like on a double bottom, if I'm very bullish, I'll still play pullbacks. For when I first teach it to people, I'd rather have them pass. Hey, it's a mistrade. Fine. It's just a pass. Once you get good at playing them, you know, that's why I also tell people in the beginning, wait for the close. Your probabilities are going to go way up. Now, are there ways to play them intraday without waiting for the close? Yes. There are ways even to play them intra-week without waiting for a weekly close or something. Once they confirm. Not the front run, but once they confirm. I try to be conservative with people while they're learning because I'd rather them pass on a trade or miss a trade than get in bad trades while they're learning to master a pattern. Hey, Raj, we covered some of the non-tech stocks over the last few months, such as agri, oil, and go with the trend up. All of those have panned out to be fantastic plays. We've covered CF, NTR, LHX, LMT. Yep, those have been some great plays. Let's just peek in at some of these. CF, again, fantastic play up. Now, this is getting overdone. Again, ags. Watching for, we'll get a pullback in this eventually, but then now your major supports, I doubt it'd even get back to 76 unless things really changed on the global perspective. And again, this is where you don't want to chase trades, but you know, these on a pullback, I will watch for areas to go in. So that was a great one. NTR. Let's just recap them. Look, and another one going through the roof. But what do you have to do when it goes through the roof? You have to trail your stop, and if you missed it, you missed it. Again, if you don't chase stuff in this pattern at this point, can it go higher? Yeah, but unless you're playing intraday and then trying to roll it into a daily position, that's fine because your longer term levels, look, even on a daily basis, my stop is down. You know, at 80, it's trading 94. So if I got in here with this kind of stop, in order for me to get proper reward to risk, my targets have to be way up here. Can it still go? Yes. But, you know, that's not something I'd be willing to chase. Now, when I talk about intraday plays, here's a nice example. You know, you got the run up, little sideways pause, letting the 8 catch up. This is the 1 hour trade. Look at all these 1 hour rotation zones. So you could have been playing this on the shorter term, but then I'm using shorter term profit objectives too. I'm not I don't have a $150 target on these. I'm using the shorter term harmonics to move up stops. For example, let me give you some examples here. So you have, like, you're bumping up this. So this would be moving up a stop, spiking through, then sideways action. And then you can bump the harmonics up to here. So my next target area would be 95.59. And also you can use the shorter term targets of the most recent swing. Like for this little pullback, once you got this little pausing bar, there your shorter term. And look, little pause right there, sideways, and then rotation through. So those are great areas to move up a stop and or lighten up depending on your strategy. Lighten up, meaning take a little off the table so you can reload on some of those pullbacks. But from a daily perspective, I would not be chasing this because that would literally be insane. LHX, again, another fantastic play. We had the breakout above the cluster, running above this key area. Would this be something I chase now? No, not at all. But this, based off the most recent swing, there's the longer term swing, and then the most recent swing would be from here, but you already see, I'll just leave this one up. There's your next harmonic, and then if it continues next week, 277.27. And this is where you can't chase that on a daily basis, but intraday, look, 1 hour rotation zone. There's where a lot of great plays are in this. Nice pullback, rotation back up. Now, for Monday, even if you pull back to 262 to about 260 and then you get a rotation back up, it's still definitely playable to the upside. It is extended, so I would not let this travel far against you because at some point we will get a topping pattern, especially with it being this overbought. LMT, going to keep an eye on this for a pullback at this point for a couple reasons. Let me just pull this off. This is a double top pattern that I saw on my other trading platform with this kind of price action. And this is not one I would short, but this is where I use these targets to watch for potential reversal plays back up. All right. So that's the key area with that. And look, that double, if it were to complete all the targets, it just takes it back to the weekly rotation zone and this prior major resistance becoming support. Where would I watch before that? I'd be especially focused on this first target with the bottom of the daily rotation zone coming in with that first target. Raj, I have added oil and oil service names. Well, let's take a look at some of these. MUR. Again, thank you for your contributions, Raj. Really appreciate you bringing this content to that's a nice little Murphy oil breakout play. Again, this is where you want to find, we've talked about this before, where people are trying to bottom pick. And yes, like I showed you PayPal, there's a potential double bottom. But that would be an aggressive, quick upside play. Look at this. We talked about this, what was it, a couple weeks ago? Find stocks with the weekly rotation zone going up, the daily rotation zone going up, the 4-hour rotation zone going up, and get in them. And look at this, nice little breakout play to the upside. So these are the kind of things that you should be watching for instead of trying to bottom pick like a SoFi or even, I mean, at least PayPal's could have potential double bottom, but these are even the safer plays. Next target, 38.27. NOV, yep, there's your breakout play today. On that strong price action. So this is really nice. You see this little breakout. This is a 15-minute chart. You see, I love these. Look at this. Here's what I love. Let me mark this off on the daily. We're going to do a little teaching here. So you had this major little resistance area, the most recent resistance area right around there. Now take a look at this on the 15-minute. running up to that area, coming back, running up, basing just around there, breakout play. There's the fantastic play right there. Now, can you start watching next week? Yeah, I'd start watching for especially pausing areas with 8 pushing the price on the 1 hour, or even pullback plays, that 1 hour rotation zone. And your key resistance is now support. So this area is support. VLO. Valero. Now this one, I like that other one better because this one's lagging a bit. But this is, and see, we don't have any clear path move with this back and forth, but this is definitely playable. It's not my favorite. But you see, you got that little play right here. I gotta fix that, by the way. Just see what that looks like on the weekly. Now you have this. I mean, the nice thing about this play, this is why we have to look at all the time frames. So what happened? So we first broke away at this major resistance, coming back to the weekly rotation zone, coming through it, forming this flag pattern back with the rising weekly rotation zone and back up. So yeah, with this breakout today above those channel lines, this is definitely playable. It's not, if I had to pick though, between, I love those MER and NOV better than VLO. Because you don't want to be, I mean, depending on how big your portfolio is and everything else. Yeah, if you have a 50 stock portfolio, to go in 4 of these is not a lot. But if you have a 5 stock portfolio or a 10 stock portfolio, I wouldn't be in all these. I would be picking the strongest patterns. LPI. Again, break above this key base. Now this again is a little more aggressive than these other ones running up because you have a stopping pattern here, but you still have the breakout right above here. So testing those levels, testing the levels, testing the levels, break above it, pull back, and closing back above this. So intraday pullback and then continuing through. Next stopping point that I would not ignore is right around there. That has a decent significance. And then above there, I just shoot for these highs. So there's 4 potentially good plays. And this is just learning to read the charts. And the first 2 were fantastic. First 2, nobody should be, I mean, the first, let me just show you again with MUR. Again, daily rotation zone up, weekly rotation zone up, 4-hour rotation zone up, breakout, major breakout after a base at those highs, fantastic play. That's the kind of stuff. These are the bread and butter plays you are looking at for. Don't try to make trading harder than it is. Daily rotation zone up after making a massive resistance pattern and blowing through it. Weekly rotation zone up and closing through that on a weekly basis. Fantastic plays. Fantastic. Thank you, Raj. It was the episode where folks tried to bottom pick SoFi and PayPal and so on. And this is where, this is where, and now the only reason I'm interested, back to PayPal, why am I interested? From a quick trading, not from a investment standpoint, because we have a potential double. Why is it aggressive? Because now you're trading against the daily rotation zone. You're trading against the weekly rotation zone. So this is something you have to manage real close. This is not something I'm going to buy and put in my portfolio and walk away from for a year. This is something, if I played this play, it's moving up my stops constantly. And this goes in the higher risk category and since trading against the rotation zones when it's higher risk, this is a smaller position size. Why? Because I'd rather have a larger position size on the things with the weekly and the daily rotation zones going with me than this where it's going against me. So it's playable, finally, but we have to be patient. And look, see, SoFi's now there's no bottom pattern. I'm not interested in this at all, but I wanted to point out with even with earnings with this little pop, everybody's trying to catch this, but unless you got out, unless you got back out, look, you could be underwater if you didn't buy intraday on the 24th of February. You're underwater again. And you're fighting the declining daily rotation zone. Look, pop into the weekly rotation zone, rotation back down. Don't play them unless you're really good. Yeah, those defense stocks are making all-time highs. Yep. Yes, they are. ARK $3 off the lows once again. Again, dude, yeah, there's ARK. And by the way, there's no double bottom pattern here or anything else. So this is just, I'm not touching ARK. Again, I wouldn't trade this with other people's money I wouldn't trade this with anybody's money. I'm just watching for a continued move lower. Can we get pops? Yeah, you can get pops. Look where it is with the weekly, but it ran to the weekly rotation zone, rotating back down. And she's unloading more of her big name and again throwing it into more and more crap. This is just gonna, and she might get some rip your face off rallies in some of this crap stock because people are still buying it on rally days or especially on short squeeze days. But overall, this is sell the pops. And I talked about that even with this pops. You know, you're going to want to sell those. Why don't I look at weekly chart that goes many months or even years back? Would love to learn because always end up doing that, wondering if it's a waste of my time. I will look at it for my own stuff. I just don't want to waste people's time in this. Like Lockheed Martin. You know, when I'm doing my own stuff, okay, yeah, I'm going to scroll through this. I'm going to scroll through, you know, and go, okay, we're at all-time highs. Here's your monthly chart. Look at this big base pattern. I just don't want to sit here. If you want me to look at something particular, then just let me know. Other than that, I try to get through more information. If I was going to look at the long-term charts for everything, I can't spend I spend long enough here. I can't spend 2 or 3 hours a live stream. But if you want to call out a specific longer term chart or two, just say when you're typing the name, put a W, like -W and W or -M, and I'll look at the longer term charts. But this is what Raj is talking about. So here's your, look, new break. So this can also be used for a pullback. Now for stuff, that can be a key little level there. And that's even if it just pulls back there and bases, then you won't even trigger the double yet. Where I think I missed Abraham, XPEV. Sorry about that, Abraham. See, you still do have that. Oh, XPEV breaking down again. Remember I said if you had to keep this is a tight stop area because now that was a triple bottom now and breaking below, and you're into this, I call this a super advanced clear path move. So what would be, this is nothing I'd want to be buying right now, because I'd be watching 27.12 and then possibly a return to the major lows of 23.88. Excuse me. Okay. And now, because also you have your prior support, major support becoming major resistance. And with the declining rotation zone, there's better things to trade in my book than this at this point. Now, we could get it. Look, back here. See, this is why you want to be patient. What was this back here? Nice little double bottom pattern. So that is the playable pattern. And then there's a bunch of continuation trades. Let's see what else. I, for one, trade Tesla because it's the most active option chain on the markets. High vol and lots of volatility. Even though the trend is down, there are great opportunities every day. And that's fine. And there's a lot of people who play Tesla. Because it's one of the heaviest option traded. It's heavier than a lot of the SPY and the Q options a lot of days. So there are great opportunities, and that's why I still cover it. But just because it's in bearish mode, what I want to stress to people, like with Tesla, it's longer term bearish mode. Does that mean you can't get some good intraday plays? You can get great intraday plays. You can get even a few day plays, you know, for good rallies. But it's not that no-brainer that it was back here. This was, you could screw up trades and still make money. This does not give you a lot of room to screw up stuff. Can I please look at Apple and where it can go? Again, we looked at Apple yesterday with this gap down. My key level, it's right here. I mean, you bounced off it slightly, but I'm watching for some downside momentum through 163. So far, see, you can bump this down a bit. If you want an intraday play or an area, now you have a little double on here. So you have interesting. Now we have a pattern. Now we have something that can be played. So you still have a gap left behind here. So this can be played. Above 164.46, 165.64 stop reduction, 166.22, which is virtually close to the gap fill, and then 166.81. Is that a long-term play? No, that's a short-term play. Why? It's still in this area, and we have the rotation zone against it. Until, you know, but that's a definitely upside play. The downside play, you see this major support shelf now. We had to fine-tune it a little about 162.50. You start getting below here, even if you want to be a little more conservative, I'd play 162.15. You see this little level right here? Why? Into this, I talked about this the other day, you have a clear path move. So there's no real major stopping points until 158. So now you have your bullish and bearish case. But the bullish case is just for a quick little pop. This is not a bullish trade to go, okay, Apple's going back to 177. This is a bullish trade to say Apple's going to go maybe bounce to 167. So you get a strong tech day. You know, let's say there's a strong tech day on Monday. This could definitely be playable. It's a nice little play to the upside. Nasdaq's weak, technology's weak on Monday, play to the downside. It makes sense, William? Let me know if that makes sense. So you have that's your plays on Apple. Neither of them are long term. Longer term, I'm still bearish on Apple. Why am I also bearish? Because if we look at the ratios, here's your mega cap to SP ratio. What did this just trigger this week? Massive double top triggered. It was confirmed last week. Little rally up. Prior support becoming resistance and moving back down. So longer term, I'm bearish on mega caps. Does that mean we can't have rallies? No, we can have rallies. You can have great rallies, but are they long-term duration hold rallies? No, like just we went through Apple. That's one of the mega caps. So could we have an upside play? Yeah. Would I play the upside play? Yeah. Would I be holding for new highs? No. By the way, value growth, look at this. Rotation zone, rotating back down. We're still in trying to find those value stocks versus those growth stocks. And longer term, these are headed lower. Look at your big picture. Here's your big picture of value growth. What did this just trigger? Here you go, Raj. Here's your big picture chart. I mean, the monthly is not done yet, but it confirmed on the monthly last month. But look at the weekly now. The weekly just confirmed this massive double top. So again, value growth, it's favoring value plays for it could be the next many months. And it's also going to start retracing this key area. So you will get rip your face off growth rallies, but I'm watching to sell those things, to sell the growth and buy the value longer term. Let's see. Can you help me with how should one look at stocks like NOV or APA, which are just recovering from years of selling? I mean, we'll take a look at this. So, years of selling. I mean, this is a really strong multi-month bottoming pattern right here. I don't know if that even triggered. Let's just take a look at this too. Look at that. All right. Well, here you go. See, now this is where I do the longer term when I'm doing analysis for me. This is where I'll go through all the time frames. But since Raj asked for this, let's do it. Let's do this. So look at this. Multi-month double bottom pattern. Confirmed, but not triggered if you're waiting for it to close. Last month, it closed. So now this is definitely pullbacks. How would I play this? As long as it did not come back down to this triple bottom area, this is playable long-term on pullbacks. What kind of pullbacks are the best? I watch for, since this is a big monthly pattern, I'd watch for nice weekly pullbacks. But these are areas, since this double bottom, you can easily look at that weekly with the first target. You get back up there, I'd start watching for a pullback. But this is how I'd just be real patient and slow. Since this is a long-term pattern, you could be bullish on this for quite some time and just slowly raising up your stops. I would not be aggressively taking profits unless we got a significant weekly or daily topping pattern at a key level. Then I might take some off and look to re-add it back. This is something I trade around a core position. APA, this is something, again, monthly. You put in a bottom, a sloppier bottoming pattern here. But this is definitely, again, I watch with that kind of pattern, I'd watch for your key pullbacks on your weeklies. Like this was a key pullback on a weekly, and this was a weekly buy pattern right there, right here. So those are the kind of things that I do with these, with trying to hold on to something, that putting in a major bottom. I'd just be patient on your big weekly pullbacks. Let me know if that makes sense, Raj. How about BA, more downside? Well, you tell me, William. Let's see, what does this show you here? Let's start with the weekly on this one. What just broke on this weekly pattern? Look at this weekly close. Would you be bullish on this right now from a weekly perspective? I wouldn't. From a daily perspective, I wouldn't. You're trading into this. Yeah, there's gaps below. We've already given you the targets. That's a weekly close below this major. Look, 1, 2, 3, 4, 5 tests, and now you broke below it. And you couldn't even hold this level on a closing basis. Not strong at all. Boeing, bah. What would have to change for me to get longer term, at least at all bullish? Based off a longer term basis, you'd have to get above about 227. Why? Because that would be out through this channel. It would have to get through all these stopping points in here and then get above here. And then I'd watch for a possible return to around the 200 week. Until that happened, there's other better things to trade. Unless unless you have intraday patterns and you know how to trade Boeing real well, for the average person, you're fighting a downward move. Why trade it? Unless you're shorting this. I mean, could be some great short plays. There could be some great short option plays in this, especially with this gap left behind. But if you're playing long only, wouldn't touch it. Yes, sir, it does. Thank you. We covered APA a while ago, around 25-ish. Yep. So there, that's how you do it. And on these longer term plays that are you just go off those key weekly bars, Raj. Just really focused. Would it be worth shorting BA? Yeah, I'd consider shorting, especially on rallies back. So your prior support is becoming resistance. Here's where if you didn't already get in something intraday, uh, this is where I put on a light position and then on because it could just keep tanking down here. And then on a rally, I put on the rest of the position, especially a rally back. So you see where your 4-hour rotation zone is? You rally back up to this 188 with declining rotation zone. I'd look to establish the rest of the position if you didn't already get in something. If you weren't in something that just popped on Monday, that could be into that 4-hour rotation zone, what could be a full position play. Thanks, Mike. Your explanation to Raj made sense and answered my question as well. Well, fantastic. I'm glad I could do that. Hey, genomic stock BKNG, please. Oh. What do you think I'm going to say? You went to that 200 week. You broke down. You pull these off. You don't need those up there anymore because we had that double top pattern on the daily breaking down. So look at this. Multi-week support. 1, 2, 3, 4, 5 tests blown through. So that's your major resistance now. You might get a slight little bounce here. You're against some other support area down here. See right in there? So you might get a little potential bounce down here. But would I be touching it? No. This is something here. You want another short play? Here's your pausing area. I just want to see with the harmonics. Hit that first harmonics. Right at that, look at that. Right there. And then it would not ignore. So if you do break through this 1950, I'd be looking at, look, 1900 is your next harmonic target. It gets sort of interesting, though, because you still have this longer-term gap. So I'd be looking at bearish plays especially once you broke below 1950. I'd be looking at longer-term bearish plays down to possibly around 1783 to 1800. And this is also, I just want to see where the, yeah, definitely. I just wanted to see where those reverse harmonics would take me. Yeah, this short to gap down, yeah. I'd be, even on a rally though, if you want to try to get a better price, you get even a pop back up to this area. Again, everything I do is educational purposes only because I'm not supposed to give financial advice. I can't give you individual trading advice. I'm trying to help you learn to spot patterns, and I like the questions because that helps me answer them. But look at this. Prior support, becoming resistance. Same concept that we talked about with Boeing. Here's your 4-hour rotation zone. Even you could get this gap fill. 4-hour rotation zone, this is the kind of stuff where I would look to put on put spreads. So, same kind of pattern. Once you break these key resistance, because even if it bounces up more, you have the declining rotation zone. So you have a lot of overhead resistance and any overall broad market weakness, kaboom. Yeah, the stock moves big time volatile. It does move big time volatile. So you have to take that into consider with your position size and your stops. And where would a key stop be for, like I'd put on smaller position size because I'd have wider stops. Where would my stop be for any short plays? Right around this area, 200 right there. Because why you get above this area? What do we have? A gap play. This could then return really quick. So again, if I have a wider stop, I have a smaller position size. And you do have to use wider stops on this. However, that volatility can really work out nicely for this short play because it could easily fill this gap super quickly. There you go. All right. Put option play on BA looks great. Mike, can you look at NTRS? It seems to be at support on weekly chart. Yep. Yeah, it's got some support here. Just seeing if there's a really good Hey Coco over, how you doing today? Yeah, this is all right. You got a nice little pattern here. If you want to play this to the long side, this is sort of interesting. You actually have an aggressive buy above today's high, and that would be a gap fill play. This would be a very short-term play. The only reason I'm interested in that is because you have a potential double. It's a little sloppy because of this thing. You actually have to go off, not that one, this being the high. And you're against the rotation zone, so that is an aggressive play. But if you're playing against support, you have a great stopper on this 105.85 area, 106 area. Keep a stop below that because if you break below this, this isn't enough to give me long-term support. Because you break below that, I'd be watching for that 200-week easily return area, but you get a little aggressive play here with a gap. I consider rolling that into a potential double play, but then if I rolled it in, I would not ignore that first target because against that declining rotation zone. And this is looking a little weak. And the banks are starting to get, I think there's a lot of risk out there with in the banking sector right now based off what's going on now at this point with Russia and Ukraine. And I think we could get some big ripple effects over the next few weeks from some defaults. So I'm kidding. Now, this is a regional bank, but you're getting a lot of banks breaking down. Like, you know, here's one I would not be. You could get bounces in this, but look at this with Citigroup. Weekly close. What are we closing into? Voop, voop. Clear path move. Gaps to the downside. This is another one. Put plays, sell rally plays, even on pops on this. The only way I'd change my tune on this one is if Citibank could get back above about 66.80. Other than that, it's short plays. So you have a really good longer term stop area. And you have this play to the downside, clear path. And see, before that, you had this little double. That's the reversal. So great little area there. Soon 401k will be 201k. Wouldn't that be 200.5k, Rich? Wouldn't that be 200.5k? Come on. Mike, I'm long JJN from 26. I'm thinking about hedging my position with puts into April. Looks a bit of a blow off top to me. What are your thoughts? JJN. What's your implied? I can't look it up right now. I have my other trading platform closed. What's the implied volatility of this thing? Because I wouldn't consider hedge. I definitely raise a stop, but if you're still bullish on this long term, yeah, this is really getting overdone. See, that's the problem. I'd probably look to even play some covered calls if volatility is super high. Because even if this pulls back a little and goes sideways and you got volatility start coming down, you're gonna suck in that premium on the calls. Versus buying puts, if volatility comes down, even if this starts backfilling a bit, you're losing the money with the volatility coming down. So that's interesting. Or I just keep a tight stop. I don't know if I do this as a put play. Depending on the implied volatility, I bet you it's high. When implied volatility is real high and I look to hedge something, I love to do covered calls. If stuff's low and I'm looking to hedge, then I look to do puts or put spreads with low volatility. But I don't think volatility is going to be low in this. SQQQ. Then I got to wrap this up. My dogs are... Let's see. Ultra Pro Short QQQ. Yeah, this... I hate these ultra shorts, so... You got a potential double top. Yeah, that could easily backfill back to this 200 on the 1 hour. I just don't like trading these ultra ones, ultra longs or ultra shorts, because you can get some really crazy moves in them. Double top on 1 hour. Let's just take a look. Yeah, that's a valid double top on the 1 hour. So if you were long this and it got back below that, I'd be out of that position. So, and double bottom on the daily. That's a horror. That's not a strong pattern right there. Don't like that pattern at all. Nope. Wouldn't trade that as a double at all. This is a, I don't like that. It's a mess. The double top is valid though. Yeah, implied volatility is 67. JJN he says 97 short term, 18 day and 78 for 41 days. So JJN, and he said it was 67. So it's getting pumped a little. 97 short term, 78 for the 41 day. I'd love to look at implied volatility on an implied volatility chart and see how much it's spiked. But that's where it'd be an interesting play, because you can even play, and depending on your stuff, here's what's interesting, because I'm willing to JJN again. I'm always willing to keep. Now I can trade naked options. Some people can, some people can't, depending on your level of options. Remember, there's 4 different levels. So, like, I consider if it starts backfilling and breaking below this 38.48, I could get out of a long position but still hold short calls, because now you get it backfilling. So those calls expire worthless and you start getting implied volatility come down. So I just keep a really tight monitor on those short calls, but I don't mind doing that. But that's for very advanced stuff. But yeah, with the implied volatility, I again have to see the longer term graph on it. Well, you can think it's a beautiful double bottom. It doesn't fit for the parameters I trade it. So you could trade it however you see fit, Rich, but it doesn't fit my parameters. All right. We've gone on close to an hour, so I think I'm going to wrap it up again. Today, we will have another live stream around 3 p.m. on Sunday. So we can look at some more stocks then if you can attend live. Thank you for everyone who's attending. If you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Again, thanks for all the likes for the longer term viewers, and please continue that likes and comments. Everybody have a great weekend, and look to Sunday for everything. Yeah, I'll take a look at Kroger real quick, and that's the last one. Kroger's just a key, still a power move. Again, this was a really nice, if you look at the longer term charts here. Now, I would not chase Kroger at all at this point, because this will backfill. This would be another one if you were already long. I'd look at the volatility if you wanted to do a short-term play on it. But this is Kroger. Again, you have this massive base broken above it, retracement, and now just a power move up. Your next key levels, though, you see, we didn't even get a major pausing bar. So this would be your next key levels, which were probably already hit. Nope. So here's your next key level, 59.82. So 59, you're waiting for 60 to short. I don't know if I'd short. I'd probably, if I had to short this, I'd do it with options again. Or you could do a call bear spread, because implied volatility is probably higher on this one too. But there's your 59.82 harmonic level. And no, it's not a pausing bar on the daily, but it's a pausing bar on the 4-hour. That's why we have to use it. All right. I'm going to wrap it up for now. Thank you, everyone. Again, have a great weekend. See everyone on Sunday. Bye for now.